Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at those recent movements with BTC and what I think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, and in doing so you will not miss another video update. If of course you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this video then. So let's start here and we're going to take a look at the thumbnails and kind of explain what the videos were about if you didn't happen to watch the entire video through or you've missed a couple or whatever. So we were talking about the move to 29k, we saw that, and then we're talking about how we're seeing a bearish setup. Okay, we can see the last two videos here are basically saying we have a structure where we're starting to see move to the downside, and it's starting to structure out in such a way that we're starting to see the potential for a very significant pullback in the market. Yesterday's video we're talking about, is there any higher in this, or is it actually all now starting to come on down? And so this video is how much higher. Essentially is the idea that actually we have a limited amount of room to the upside here and we are more than likely going to be moved to the downside. Yesterday, we obviously saw a move to the downside and a bit of a relief rally from those lows. It's not much at all, but let's go ahead and just jump into what that was. We saw 2.96% after we slipped down. Where is that? 3.63. So a bit of recovery there, but one of the big takeaways here is that we were oversold during this payment here on the hourly, and we're up in the overbought up here. So we are looking for a move to the downside. I'm going to break that structure down and kind of give you my thoughts and opinions on what's going on here and what this all might mean for the price action of Bitcoin. So we're going to take a look at Elliott Wave theory, smart money concepts, and we'll start with the Elliott Wave theory side of things. So following on, we obviously had our expectations here, right? This was the 50 to 88.2% retracement of our 5-wave structure coming down this side. And now we did overextend ever so slightly above here. You can see that, right? That happening on Saturday at 1 a.m. We just overextended ever so slightly to the upside. Now, that isn't overly too unusual. So it's a little bit out of the typical kind of movement, but it's pretty typical of a wave 2 being this deep for a wave 1. Okay, so the idea here is that we have a big wave 1 situation taking us down into this low over here. All of this is a big wave 2, and we're going to see ourselves with a big wave 3. Okay, and this is just the beginning of that structure. Okay, and I think we're potentially going to look to finish off a wave 1. Possibly we have already done the wave 1 here, and we see 5 waves in within this range. It could be something like this, right? It could be that. I don't think that's necessarily the case. I'm going to look at this thing and think to myself, it's more likely to be 1, 2, 3 up here for 4, down here to 5. A little bit skewed. It's not a nice and neat 5-wave structure, but still follows the rules nonetheless. And the reason is I can kind of see 5 waves contained within that wave 3, and so therefore I'm thinking it's actually the most probable scenarios that we do move on down. Now, if that is the case, considering that we're overbought on this 1-hour chart, then our expectation should be that price action needs to come down to the 1.236 to the 1.618, that being this little range just down here. Okay, this is basically 27,794 to 28,105. Okay, so that would be the expectation there. Alternatively, if we have finished, then we'll just rally on up a little bit more, but we should not go up higher than the swing high, which would be this one here at 29,820. So you can start to see how we now have these 4 key areas of invalidation to note. Okay, so we look at this one here at 29,820. The next one above that is 29,969. The one above that is 30,036. Now, those 3 are very, very tight together, which gives me the idea that we have a nesting occurring here. Okay, so we can see 5 waves coming down here. Let me actually just zoom out of this just a fraction, right? We have the idea that we have a wave 1, wave 2, wave 3, 4, and then 5. Doing something like this. Zoom out a little bit further. All of that is basically contained wave 1, wave 2. All of that is a wave 3, hitting that 1.618, go up into wave 4 and wave 5. And then all of that, this is where things really get crazy, is potentially wrapped up inside this one. And we go wave 1, wave 2, wave 3, wave 4, wave 5, right? And you can really start to see a bearish structure emerging, okay? And now, obviously, there's a lot of things that have to happen for those kind of patterns to play out, and we don't want to kind of, just focus in on all of them and just kind of confuse people. We want to focus on the here and the now, but just kind of know that the structures here are very important to how the price action of BTC is playing out and what that might mean as a part of a bigger macro. On these micro movements, all these nested structures are essentially helping us build out that macro picture. Okay, so at the moment, everything's looking pretty good for that kind of idea. So we've either completed this, and it's hard to say for certain. I mean, I can take it down into a 30-minute chart, and we can kind of try to see whether or not we have that structure. I don't think we do. So for the most part, I'm quite happy to think that this is just a wave 4 up here, 3-wave correction, looking to come on down. Still possible that we rally up a little bit further, and I wouldn't expect us to kind of go up higher than 29,250. And if it does, then I would say that we probably already did complete the wave 1. And we have invalidation of the idea of our structure to the downside at 29,820. So there's lots of numbers in there, lots of things that you might be, whoa, this is really confusing. And I apologize for that. It is a complex subject when it comes to Elliott wave theory, which is why I put together a whole course on 𝗕𝗘𝗪𝗀𝗀𝗪𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀 everything that's going on there, check it out, 𝗕𝗘𝗪𝗀𝗀com, linked in the description below. And I explain all the structures, the Fibonacci relationships, how to apply it, how to trade it, all that kind of stuff. Okay, it is complicated and it does take a long time to practice to get it right. Okay, Elliott wave theory is always correct because there's always a structure that is correct. It's the analyst that's always at fault. Okay, so if I get something wrong, that's why Elliott wave theory seems to fall down. And if Elliott wave theory is applied correctly, it just looks like it's a beautiful thing that all comes together really nicely. But nonetheless, we can kind of digress from that. Now, Elliott wave theory gives us the idea that we're in this super bearish structure just emerging. It's still possible that it's something else because there's many different structures that Elliott wave theory can present itself with. But for the most part, it's looking like we are starting to see the beginning of a reversal pattern here, and it's all nesting inside each other, and it can be disguised as many other things as well. But for the most part, very, very interesting. Now, when we jump on over into our smart money concept side of the business, here we can see that we have the obvious, right? And I'm going to say the obvious because it's obvious to me, and I'm going to just kind of show you what's going on. Now, smart money concepts plus Elliott wave theory is very, very powerful. And the reason for this is that smart money concepts sometimes gives you these kind of idea that we're in a bullish or bearish market at a micro level, right? And you can see these kind of little minor little flags that keep coming up here and there, right? And they're all over the place. And you kind of think, how are you supposed to trade these? And the truth of the matter is you don't. You don't really place too much attention on those ones. At least I don't, because ultimately what else we can see here is really obvious when you know what you're looking for. And that is that you have this overlapping structure, okay? And what we mean by this overlapping structure is that we see that we have a move up, we come down and we overlap previous structure moves. We come up, we come back down, again, we overlap. So this is an overlap to this, for example. This is an overlap to this area. When we break up higher, we come down and we create these overlaps. We came up, and then we finally broke on down. Now, why is this important? Well, this is important because Elliott wave theory says that when you have an overlapping structure, it is deemed corrective. Okay, it is not impulsive, it's not a trend, it is a short-term movement. Essentially, that's what it means when it says corrective, okay? It doesn't mean that it's correcting going down, because that's how kind of retail might think about it. It just means it's a short-term move. Do not expect it to continue for very long. Now, the other things that you can see here that's quite obvious is that we have that whole thing that we usually see across many of these real basic channels, is that we're going up into higher highs and higher lows, right? And the problem with this is that that is a bullish idea, right? Oh, look, we're going to higher highs and to higher lows. Right, we're going to the moon. Yet at the same time, we can see that we have these overlapping structures, right? We can see that we had this break up here, come down, overlap this. Break upwards, come down, overlap this. Break upwards, come down, overlap. Right? And so you can see the idea that this is a short-term movement. It's never going to last all that long. And it's a recipe for disaster, right? And we can kind of see that quite clearly. And so when I very easily can spot these things, many people can as well, you can see that where you see a nice run upwards, where there is limited amount of upside, versus one that has a lot of upside, or a lot of overlapping structures to the upside. That is basically essentially a recipe for disaster. Okay, so we know that all of that is corrective. This is exactly what was happening on the daily chart from June to August 2022. And one of the reasons that I was saying this is not going to be the next bull market. And it's one of the really obvious things as well. It's really simple to do. It doesn't take terribly too much knowledge to kind of just spot those things. Now, from an Elliott wave theory point of view, we know it's corrective, or we know it's short term. We also know that we have these trend structures emerging to the downside. Okay, so all those things are good. But what does smart money concepts tell us? Well, smart money concepts tells us that we have ourselves a bearish situation. We changed from bullish to bearish. We confirmed it down here, and we confirmed it again here. Okay, so we know that this whole structure and everything that is emerging for BTC is in a state of play of bearishness, not bullishness. Okay, this has been the case since we got to the 17th of April. Okay, since the 17th of April, we got confirmation that our characterization of the market had changed at the hourly level. And we got confirmation of that down here in the 24th of April. We got confirmation again over here on the 1st of May. Okay, so we know that we are not thinking that this market is likely to go and reverse up straight away. Now we have a strong high up the top and a weak low down at the bottom. Again, this is telling us that it's unlikely that we're going to push up higher than these swing highs that we've already got. Okay, the market structure is telling us that it's very unlikely to occur. We also see these red internal selling blocks. A lot of people are looking to sell in these ranges, and therefore there's a lot of selling pressure, a lot of supply entering the market here. Unlikely for that to get broken and pushed through. We then see that we're testing equilibrium. Pretty typical thing to do. We've also filled out all fair value gaps. Okay, that's another thing to kind of note here. Looks like we are going to be testing the support level here. Okay, and it does look like they're overbought on this hourly chart. We're probably going to lose the 200 EMA here and the equilibrium. As you can see down here, we have a buy order block. It is no coincidence that there's a wick there. Basically, that hit the buy orders and the price came out. Okay, so for the most part, that's still pretty strong. Until we chew through all of those buy orders down here, we're probably going to look at that as a support line. Down here, another set of buy order blocks, and then we get to the weak low, which is indicating to us that we are likely to break this area and we are likely to go down lower than the swing low. So smart money concepts is pretty much aligned to the idea that we have got further downside in the same way that we see that with Elliott wave theory. The two things working together in conjunction to confirm that we are, in fact, looking for a move to the downside. Okay, but those are my thoughts and opinions on the data in the charts as I personally see it. Let me know what yours are down in the comments below. I'm going to leave the video there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe? And don't forget to join us down in Discord. Guys, until the next one, though, have a fantastic day. We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.